This is Amit Prabhari, founder and managing director of CR Forex. In today's presentation, we are going to discuss three things. First, what is the outlook for dollar rupee pair for coming days? Second, strategy for exporters and importer. And third, trading ideas for coming days. Now let us start with the first part of the presentation, that what is the outlook for dollar rupee pair for coming days. Before coming to a conclusion, let us evaluate factors. So on the depreciating side, let me start with the first factor, which is called crude oil. Crude oil, which was coming down from $129 per barrel, it had made a low of 93, and in last 1 week, crude oil prices again started moving up from $93 per barrel. It has moved towards $106 per barrel, and it is adding pressure because of rising tension between Russia and Ukraine. If crude oil price continue to trade above $100 per barrel, it will definitely add pressure on dollar rupee. Second factor is FII selling. From Jan, Feb and March, FII have been selling like anything. On an average, they have taken out $14 billion from Indian equity and debt market in last 4 months. Initial days of April, they had bring some inflows, but from last 2-3 trading sessions, again they are taking money out from Indian equity market. Third important factor, which we have spoken about in our last video also, dollar index. Dollar index is moving higher, and the target of dollar index is 102 because US economy is doing extremely well. The growth is intact, and Tuesday the CPI data, inflation data, that is also very good, because of which the Fed will be little more hawkish than other central bank, resulting dollar index to move higher. These are the three factors which will keep rupee under pressure. Now let us analyze factors which can affect dollar rupee pair on the positive side. The first factor is RBI. लास्ट 5 वीक का अगर हम डेटा देखेंगे तो RBI रिजर्व्स हैज फॉलन डाउन बाय $28.5 बिलियन. ये $28.5 बिलियन पे कुछ पार्ट ऐसा है जो RBI डॉलर्स को सेल कर रही है, एंड सम पार्ट इज बिकॉज ऑफ रिवैल्यूएशन ऑफ एसेट, बट द नंबर इज स्टिल अ बिग नंबर. सेकेंड रीजन है कॉर्पोरेट इन्फ्लोज का. वी हैव सीन सम कॉर्पोरेट इन्फ्लो coming in last week, and there are some corporate inflows in the form of LIC IPO, Adani raising money. This all can act as a positive factors for dollar rupee pair. So now let us come to the view. On the view side, we expect that the dollar rupee pair has entered into a consolidation phase where 75.70 will act as a strong support for the pair, and 76.70 will act as a strong resistance for the pair. Generally, it has seen that after a consolidation phase in dollar rupee pair, it will give a breakout. There is a higher probability that the breakout will come on the higher side, and if 76.95 is taken out and RBI do not sell dollars at those levels, then the pair can move higher towards 78 to 78.5 level in coming days. Now let us move to the second part of the presentation, and what is the strategy for exporters and importers. As dollar rupee pair is trading in a consolidation phase, it is very important that you have a right kind of strategy to hedge your exposure. For thin margin exporter, last week we suggested that they can cover 70 to 80% of their exposure close to 76 to 76.10 level. In this week, they might have taken order close to 75.70 to 76 level. We will suggest them to cover 85 to 90% of their exposure close to 76.45 to 76.55 level. One important thing to note for thin margin exporter is that the resistance zone for dollar rupee pair is at 76.45 to 76.65 level. So we request them to cover maximum amount of their exposure close to the resistance level. Now let us discuss strategy for thick margin exporters. Thick margin exporters like textile exporter or engineering exporters. From last 2 to 3 weeks, we have been suggesting them not to book forward, and whenever the inverts are coming, we have suggested them to pre-utilize their forward contract, long-term forward contract, and we suggested them to wait for higher level close to 76.40 to 76.60. I think this week they will definitely get those kind of levels, so they should initiate selling their exposure, and they should book long-term forward contract. The important thing to note for thick margin exporter is that as the overall biasness of the pair is on the weaker side, they should not increase their hedge ratio more than 50%. Ideal hedge ratio 45 to 50%. Now let us discuss strategy for importers. From last 2 weeks, we have been suggesting importers that they should hedge their import till May end between 75.60 to 76 level. Those importers who have missed buying their import at those level can cover partially between 76 to 76.10 level, and partially they can cover at 75.70. If they get an opportunity, they should be hedged till May end. Any importer who is not willing to hedge and pay premium, उनके लिए एक फाइनल स्टॉप लॉस है. The final stop loss is 76.95. The day 76.95 is broken, do not use your brain. Just go and simply buy import for next 1 month. Now let us discuss trading ideas for coming days. We had given a sell call on Euro USD. उसका टारगेट था 1.08. Last week it has made a low close to 1.0761. If someone has traded 1 lakh Euro USD, then they would have made close to 1.25 lakhs to 1.35 lakhs. For coming days, there is an opportunity in selling GBP USD. One can sell GBP USD between 1.3125 to 1.3150 level. Target is 1.2945. Stop loss जो है 1.3260. This is on the spot basis. Now you can also initiate selling in GBP INR in currency futures. Sell between May future between 99.94 to 100.05. Target is 98.5 level. Stop loss is 101 level. With this, I will end my today's presentation. Jai Hind, Namaskar. फिर मिलेंगे next week. Thank you.